The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, earnings season has flown by, but as it kicked off, it's been reported that the finance and insurance sector was the second fastest growing industry in Singapore in 2024, following Accommodation. In fact, our trio of banks, DBS, OCBC, and UOB, are set to distribute a combined 13.7 billion Sing dollars in dividends for fiscal year 2024. But other than these large caps, a number of other stocks related to finance also saw tremendous growth. Perhaps it's then now time for us to shed some light on some of our SGX-listed small caps. Well, to find out more, joining me now is Geoff Howie, market strategist at the SGX. Geoff, welcome back to the show.
Thanks very much, Hongbin.
Thank you so much for joining us. Geoff, our trio of banks, DBS, UOB, OCBC, all posted stable earnings for the fourth quarter that ended December. But let's not talk about them today, because beyond the large caps, several other companies related to financial services have also completed their fiscal year 2024. So let's shed some light on some of them, starting with Yangzijiang Financial Holding. Tell us more about Yangzijiang Financial Holding and why investors should take a closer look at this company.
Sure. It's a cross-border investment manager in public and private companies. It also invests in funds and debt investments. It also has a branch that looks at wealth management and fund management segments. And I guess its core markets, China and Singapore. And it has pursued a strategic portfolio repositioning in recent years. That is to reduce the assets under management proportion of debt instruments that are within China. So last financial year, I think it had reduced its exposure to debt investments in China to 29% of the total assets under management. So that's already exceeded its midterm target of limiting exposure to that debt investments in China to below 30%. And now this company, it spun off from Yangzijiang Shipbuilding back in April of 2022, so almost 3 years ago, and it's generated around 6% annualized total return since then.
I see. Well, Geoff, according to Morningstar, the ROE is 8%, with the price to book at 0.51 times and market cap at 2.07 billion Sing dollars. Now, the stock has averaged just over 2.4 million Sing dollars a day in turnover in 2024 and 11.7 million Sing dollars a day in the first 2 months of 2025. How significant are these numbers, Geoff? Is there more room to grow for Yangzijiang Financial Holding?
Yeah, it is quite significant because, as you asked in the first question, investors are actually looking closely at the company because it's averaging that much turnover a day. For, around, as you said, 12 million, which I think's gone up to around 14 million if you look at what's happened this week. And that's for a stock with a $2.4 billion market cap. So it's relatively a very liquid market for this particular stock. It now ranks just outside the 20 most traded Singapore stocks this year, alongside Hong Kong Land and Mapletree Pan Asia Commercial Trust. And they maintain much bigger market caps. I think Hong Kong Land market cap's around 13 billion Sing. I know the Mapletrees, they're all around 6 billion Sing. So that's also important. And it's also ranked among the 5 stocks that have also booked the most net institutional inflows so far this year. But for the financials, as you asked, it was back on Feb 24. The company reported a 50% increase in its net profit for the year. Income from the maritime fund assets, I think, nearly doubled. And the group also saw increased net fair value gain, mainly due to some unrealised gains from Singapore fund investments. So as you asked that question, how significant is it? There's some pretty significant financial numbers. Is there room to grow? I think looking forward, the group intends to keep refining its sector rotation strategy, looking to limit new loan exposure to underperforming industries like in real estate, and further progress on the reallocation towards maritime-related investments as well as private credit funds in Southeast Asia will matter. And obviously the performances of those assets will also be a growth driver. And of course, how well the company can continue in its active management of non-performing loans will matter as well.
I see. It looks like Yangzijiang Financial Holding is definitely a small cap to watch. But another small cap, Hong Leong Finance, achieved 11.5% net profit growth in fiscal year 2024. how has HLF shares fared since its relisting back in 1981?
Yeah, back in 1981, 2 years after Empire Strikes Back was released, Hongbin Finance, I think it generated around a 5.5% to a 6% annualized total return since then. I can use the Refinitiv icon to actually go back to that date. And yeah, so looking at it now, it's 5.7% annualized total return since then.
I see. So what should investors then take note of regarding Hongbin Finance if there's one thing they should take note of?
Take note of its strategic focus on digital transformation and innovation. And we're talking about a company, as you said, relisted in 1981. So it has a long legacy. But it also, I think, last year or the year before, launched HLF Digital, and that's its financial services platform. That's on the digital thing. And it's exceeded its initial sign-up targets, I think, by over 30%. And additionally, the company has become Singapore's leading financier for electric vehicles through it's got this API-based vehicle loan digital initiative that processes applications. So that's all positioning this company pretty well for the future and demonstrates, obviously, some level of commitment to adapting to all these changing market conditions that are embracing the financial services sector.
I see. Now, Geoff, Sing Investments and Finance also saw record numbers this earnings season, achieving 43.7 million Sing dollar record operating profit for fiscal year 2024. What drove these record numbers?
Yeah, I think that the loan growth was obviously really important. I think loan growth was up 9% to 2.7 billion. Healthy loan growth, in addition to, I think, maybe net interest margin was up around 30 basis points to just under 2%. Asset quality also stayed strong. The NPL, non-performing loan ratio, improved 0.2%, I think, from 0.4%. Total income also came in at a record 72 million. So the fees and commissions, I think, and the increase in rental income all helped to that. So I think you can see it's just broad base across all of its operations that drove that performance.
I see. Well, Sing Finance has 60 years of lending experience here in Singapore, but why should it be on investors' radar now?
Yeah, it's a very long history. 1964, I think, was its establishment date. It listed in 1983. It's had multiple rights issues over those decades, plus dividends have seen, I think, the total return come in also between 5% and 6% at 5.3% from its IPO right now through to now, according to Refinitiv. Morningstar powers our stock screener. That says the ROE is 8%. The price-to-book ratio is below 1 at 0.6% or 0.6. Market cap is, in that small cap region, 260 million. And the stock's trading, I guess, more turnover this year than it was last year. It's averaging around $34,000 a day in turnover this year versus $31,000 a day last year. So participation's up more than the price, which is always a healthy sign in terms of investor participation. But, despite that long history, this company, Sing Finance, still achieves many accolades. I think it's won silver and gold awards at the Singapore Corporate Awards in the annual report, the board management and risk management categories over the past 3 years.
I see. Other than Sing Finance here, MoneyMax Financial Services also saw a record performance in fiscal year 2024 with a 65% profit surge. Now, the 2 sessions post-reporting have seen trading volume increase, propelling the stock from outside the 300 most traded Singapore stocks this year to within the 250 most traded. Is there renewed interest in MoneyMax following the recent earnings results?
Yeah, I think so far there is. It's still among the 250 most traded stocks. And yeah, post those 2 sessions you mentioned, volumes on average have been around double what they were prior to that FY24 report. So yes, the answer is yes.
I see. So will MoneyMax continue to see growth within the coming months, you think? I mean, what factors may push MoneyMax shares further up?
Company does it plan to expand its network across Singapore and Malaysia. It plans to enhance customer experiences and the customer value process, which can obviously drive further growth. Looking at the stock on the screener, it's not overvalued as it has PE ratio of 6.2 times and an ROE of 16%. Market cap is around that, below that 200 million mark, but similar to the others at 180 million Sing is what it is. But nonetheless, there's overall growth here and across the causeway this year. It may come in a notch lower, obviously, than it did last year with a few clouds on the global economic horizon. But it's also important that the group does, and I guess it has been important that the group has signalled that it will remain alert to all these kind of macroeconomic and industry conditions and will adjust its strategies as needed. And it did make that pretty clear. It would be pretty nimble in that regard.
Well, finally, Geoff, let's also take a look at Hotong Investment Holdings. The firm has achieved an annualized total return of 1% since its listing. Could we see more growth in this firm? Why should investors take a look into Hotong Investment Holdings?
It's a very interesting listing, right? Very unique. It's a Hotong itself is a premier venture capital investment group, and its share price is up around $1.40. That's up $1.29 at the end of last year. This stock listed back in 1997, and it's basically focusing, when you look at the global private equity and venture capital deals that it focuses on, it's very similar to what a lot of global firms in this space do focus on. And if you look at kind of like the growth of venture capital and private equity and look at the share price of this company since the end of 2010, it's actually generated an annualized total return of 7%. So when you focus on just that time period. So, it also had that big standout year in 2021, as most venture capitalists did, with that surge in global private equity and venture capital deals and the exits and so forth after we had that pandemic-related recovery. So interesting that this is like many of those other stocks. It's one that's listed here, but not necessarily everybody knows about it. It did report a significant increase in its attributable income last year. I think it was something like 329 million new Taiwan dollars, which was up from just under 100 million the year before. And that was obviously driven by its strategic investments and also, importantly, favourable exchange rate movements, which don't happen every year.
I see. Well, speaking of strategic investments by Hotong Investment Holdings, how have they tackled, the recent global challenges such as shifts in trade policies and evolving geopolitical dynamics that kind of appeal to you?
Yeah, I think what's relevant, and you're seeing this across a lot of investors at the moment, they obviously follow their mandate to invest in innovative and businesses that have promise on a global scale, particularly in Taiwan and China, Silicon Valley. Our focus also on long-term capital appreciation, like many of the investments in their portfolio and many other portfolios of other firms also do. But in response to global challenges like the trade policy shifts we're seeing right now, the geopolitical changes, they have been refreshing their investment team and they're expanding into new geographies as well as technologies for the mid-term as well. And I think this is what you would expect this in this modern year we're in right now, right? Everyone's sort of like bringing in their time horizons, shortening their horizons to make the most out of this volatility.
I see. Well, we took some time to shed light on some of the small caps here, but let's take a look at the overall landscape here. Geoff, how do these small caps kind of compare to our large caps then? Are they on the same trajectory of growth?
Yeah, it's interesting, right? Because they're in a very different kind of category when it comes to investing. Our four largest caps in Singapore, I mean, you could call them mega caps, the four of them. They all have market capitalisation above 50 billion Sing dollars, and they have pretty much outpaced in recent years. The banks have been driven by net interest income, non-interest income growth last year. More proactive capital management coming into this year has been a factor. And then you've got Singtel as well, which has outpaced the broader market. It's pressed on with its strategic initiatives of asset monetization and value creation. They're also our most traded stocks, and they also benefit from a lot of institutional participation on account of also being index heavyweights. But they can also be more susceptible to the big global forces, right? And we saw it this week. You had trade tensions really surge this week. Countries have signalled retaliation tariffs. The US has gone on the defensive, saying that the tariffs are essential for US economic strength, which also leads to global stability. And the impact of those trade tensions across markets really took a toll on global banks this week. So we also saw DBS, OCBC and UOB average a 4.2% decline in the week. And banks that are also seen as more active in trade finance across the world, like JP Morgan, HSBC, Citibank, BNP and Standard Chartered, they also average paralleled 4.4% declines over the Asia week as well. So I think, history shows that when international banks can be among the most impacted industries when you have tariffs and retaliations that take place, due to the reduced demand for trade finance. But I think comparatively, the larger group of small cap stocks, the returns and valuations, they can tend to be a little bit more asymmetric because, of course, investment sentiment is fundamental, company financials, analyst outlooks, macro factors. But that one thing you do is, I think, for the small caps, is that there's less research coverage for small caps. For instance, DBS, we have 20 analysts that cover the stock. Young Financial, which we spoke about before, it only has one. That's Andrea at CGS International. So for the small cap world of stocks, I think just like elsewhere in the world, it is seen a little bit to be more of a hunting ground for investors and traders.
I see. Well, despite these companies that we've highlighted earlier in our conversation are not household names, why should investors, still take the time to explore them then, Geoff? I mean, why should investors include these small caps into their portfolios?
I guess one thing is they have the potential. There's potential for small caps to become mid caps and eventually large caps. One example we've got here is iFast Corporation. So that's also a financial services firm.
Right.
Prior to 2020, it was a small cap stock. It had a market cap of 270 million, like the other stocks we've been talking about. But its market cap is now 2.2 billion Singapore dollars. So at the moment as well, I think there's also much focus at the moment in our market on growing the liquidity in the mid cap, small cap space. And so investor participation in their stocks, in these stocks, I should say, we really need it in order to sustain their presence and their relevance to investors in the future. So I think the stories are very interesting and really appreciate the time you've given us to convey and give you some examples of that with some of these names. We just got to keep working on getting them more known to the investors here in Singapore.
Right. Speaking of which then, are there any other small caps that are not related to financial services also worth highlighting, Geoff?
Yeah, heaps. we list over 120 small cap stocks that are the larger of the small cap. They have between $500 million and $100 million of market cap. Within that segment, you've got stocks like GP Industries, Grand Venture Corporation, and the Infra and Civil Engineer OKP Holdings that have been amongst that group that have seen the most turnover increase this year when you look at, while also posting gains when you compare to last year. So I could come and do this every week if you had the time, but you're very busy and, enjoy listening to the program, but don't want to scare everybody away.
No, would love to take some, time to highlighting all these small caps. I mean, just by doing some, I think we've covered about 5 today, and it was just very interesting to take a note of, their growth and why they should be on investors' mindset. Well, thank you so much, Geoff, for joining me today, for your time and your insights.
That's an absolute pleasure. Really appreciate the time. Thank you, Hongbin.
Thank you. That was Geoff Howie, market strategist at the SGX. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.